Yeah, so the topic is market structure, and we are looking at dealing ranges and break in market structure. Okay, so this is a Euro USD chart. This is a weekly chart, the weekly Euro USD chart. Okay, so I'm going to show you practically uh, how we how we use actually how to mark dealing ranges, and then how we identify break in market structure. You please pay attention to this. I would love for you to go back in this chart, weekly chart, and do some practice. Of course, dealing ranges are are in all time frames. That's from monthly time frame, weekly time frame, daily time frame, 4-hour time frame, up to 15-minute time frame, even lower. But for the purpose of presentation, I'm going to use the weekly chart. But as time goes by, you will look at all the time frames. Okay. So for the purpose of presentation, allow me to use this Euro USD weekly chart. Okay. Now pay close attention. We're going to mark first off the bearish market structure, the dealing ranges in the bearish market structure. We also look at this bullish market structure, the dealing ranges in this bullish market structure. We're also going to look at the breaking market structure right here. Okay, so pay close attention. So we will start up here. I will start up here going lower and lower. Yeah. So in this drop, this is a bearish market structure. We have dealing ranges. Okay. Right. So we will start up here. Huh? Actually, let's start up here. So we have this lower low right here, and this lower high. So we'll start with this lower high. So I said that we mark the dealing ranges. Okay. So we'll start here. We have this lower low, lower high. These are the lower low right here. Okay, so pay close attention to what I'm marking, because I will require you to go back and mark this by yourself, and this will make you understand more. Because the purpose of teaching you is that is because that I want you to do it on your own. So please make an effort of doing practice. So we have this higher low. I mean, this is a bearish market structure. We are making a series of lower highs and lower lows, lower highs, lower lows, lower highs, lower lows, lower high, lower low, lower high, lower low, like that. So we are going to mark the dealing ranges and the breaking market structures. Okay. So we have this weekly chart on Euro USD. We have this lower low. So change the color to this. So we have this is lower low. This is the current lower high up here. Okay. So lower low, lower high up here. Okay, so this is lower high. Okay. Make sure you mark the optimal points up here. So lower low, lower high. We rate. This is lower low. Right here. This is lower high up here. Lower high up here. Okay. So the previous lower high is up here. So the current dealing range is between these. Okay, let's mark the previous lower high. Between this one. This is the previous lower high. So lower high, lower low, lower high, lower low. This is the previous lower high. The previous lower high. This is the dealing range between this lower high, this lower low. This is the dealing range right here. between this lower high and this lower low. This is the dealing range. This is where we hope to get sales in. Okay, so this rally is the dealing current during this. So this rally, these two up close candles, the bullish weekly, this is a retracement within this range, between this lower high and this lower low. So this is a retracement. The retracement create a new lower high. Okay, so a new lower high is created, market will drop, breaking the below the previous lower low. How do we note breaking market structure? This is the breaking market structure right here. Immediately this candle, full body crosses below this lower low, we have broken below this dealing range, this lower high and this lower low. So this is a breaking market structure. Markets as breaking market structure, BMS. Okay. So and with the BMS, we have a new dealing range. Okay. So the dealing range is between this low high and the current lower low. So after breaking market structure, we have a new lower low right here. It's a new lower low right here. This is the new lower low. And our current dealing range is between this lower high and the current lower low, which has been formed after breaking this lower low. So the current dealing range is between this lower high and this lower low. So our current dealing range between this lower high up here, this lower low. This is the current dealing range. Of course, we had a retracement. Is that retracement within this range, between this lower high and this lower low? This is the retracement event. So after retracement, you get a new lower high up here. This is a new lower high right there. And after a new lower high is created, you drop breaking below this previous lower low. So this current dealing range between this low high and this lower low is broken right here. Immediately this kind of breaks and closes below this lower low, we have a break in market structure. This is where we have BMS, that's breaking market structure. Right here, we have a breaking market structure. Our and after breaking market structure, we get a new lower low right here. This is a new lower low. Later, I'll show you how to identify the lower lows when we start with the swing lows and swing highs. Yeah. So lower high, lower low, value back, retracement or a pullback. Hit a new lower high, drop, breaking below this previous lower low, breaking market structure. This kind of broke below this previous dealing range. Now, with this, we have a new range. New range is between these lower high up here and the new lower low down here. So our current dealing range is between these lower high and these lower low down here. So this is the current dealing range right here. This is the current dealing range. The current dealing range, we expect a retracement. Okay, so this is that retracement within this dealing range, within this lower high to lower low. This is the IPDA, the algorithm doing its work. Okay, lower high, lower low, retracement within this dealing range. The dealing range is between this lower high, this lower low. Retracement or a pullback, then drop. Okay, so we get a new lower high up here. This is a new lower high right here. Immediately the market broke below this previous lower low. Now we have a BMS, okay? Right here. So BMS right here. Break in market structure. If the break in market structure, we get a new lower low. This is the new lower low, this one. After we break, this kind of breaks and crosses below this previous lower low, we have a new lower low down here. So okay, is a new lower low right there. Right there is a new lower low. The previous low high. Low high is a new lower low created after BMS. And currently our dealing range is between this lower high and this lower low. So the dealing range between this lower high and this lower low. So lower high, then lower low. Okay. So this rally, this kind of rally is a retracement within this range, between this lower high and this lower low. Okay. Yeah. You get a retracement, you hunt for new sales, then the market drops. Once it drops, it breaks below the previous lower low. So now it's out of this dealing range, meaning this lower high, this lower low. Immediately this kind of breaks and crosses below this lower low, we have a BMS, that's breaking market structure right there. So now the breaking market structure, remember this was a retracement. So our new lower high should be this. Yeah. New lower high right there. And a new lower low, it was created after breaking market structure right here. So this is, excuse me, this is a new lower low. Okay. We mark it out. A new lower low right there. It's a new lower low right there. This a new lower low. Yeah, for BMS right here. So our current dealing range is between this lower high up here, this lower low. So this is the current dealing range. So if you have to look for more sales, you look for sales within this range, within this low high, this low low. So this current dealing range. So we expect a retracement. This retracement where we hand for more sales. Okay. Sales. Retracement, we create a new low high in this dealing range. This is a new low high like that. There's a new lower high. After the new lower high is created, so we sell up here, then the market drops, breaking below this lower low. So the current dealing range, which is the lower high, the lower low is broken right here. Then that's when we have a BMS. That's breaking market. So we have broken below the current dealing range right there. Right there. So these candles break below. Okay. And now so we break below, we have a new lower low down here. So a new lower low down here. So this is our current dealing range between these lower high up here. Lower high up here. the new lower low after BMS, the breaking market structure. Yeah. And our current dealing range is between this low high and this low low. So like there, you have a dealing range being this lower high, lower low, lower high, lower low. This is our current dealing range. Yeah. So within this dealing range, you expect a retracement. Within that dealing range, expect a retracement, and in that retracement is where we hunt for more sales. Okay, within that retracement. Okay, yeah. So within that dealing range, you expect a retracement, the new low high within this dealing range. So get a new low high up here. A new low high. Right there, you have a new low high. And after a new low high is created, the market drops. So we said here, then the market drops, breaking below this previous low. So this dealing range has been broken. And then that's what we call a breaking market structure. So we have broken below the current dealing range. That's breaking market structure right here. This candle breaks this dealing range in this low high, this low low. So breaking market structure. The breaking market structure, we have a new lower low is created down here. Create a new lower low down here. So our current dealing range is between this low high and this lower low. So we get new lower high. So yeah, the new lower low, the BMS. Right there. So our new dealing range between this low high and this low low is our new dealing range. Yeah, so the new dealing range within this dealing range, within this low high, this low low, we expect a retracement. Yes, we had this retracement to create a new low high right here. We got a new low high right here. So low high, low low, new dealing range, retracement, then a new low high within that dealing range. This is a new low high right here. Immediately we break below this lower low. That's a BMS. That means we have broken outside of this dealing range. So we have a new range with the break of market structure. So breaking market structure. So don't worry, everything will make sense by time. Meantime, everything makes sense. And breaking market structure. We have a new low high, new lower low, the new dealing range. So the breaking market structure, the new lower low, like then. This is a new lower low. Okay. Yeah. Yeah. So our current dealing range is within this, between this lower high and this lower low. This lower high here, this lower low. This is our current dealing range in this lower high, this lower low. This is the dealing range, the current dealing range in this lower high, this lower low down there. We had a retracement, so we expect a retracement within the current dealing range. This is the retracement with a new lower high. So the new lower high was created up here. lower high, and when you lower high, this is where we sell. We drop, breaking below the previous lower low, like that. Is a break in market structure. That means we have broken below this current dealing range. That's lower high, then lower low. Immediately this candle closes, breaks and closes below this lower low, then we have a new dealing range. So the new dealing range being this lowest low down here. So this is lower high. The current lower low down here. So currently, what do you expect? We expect a retracement within this dealing range. That's from this low high, this lower low down here. This is what we expect. But that expect a retracement probably here or here, then we sell here. But what happened? This is what happened. We broke above this lower high. We didn't get that drop to create a new breaking market structure. Instead, we broke above this lower high. Once that happens, we have a shift in market structure. Now we start thinking bullish. Of course, I'll teach this in market reversals, so I have no worry at all. I'll teach this. But just know that when we break above this previous lower high right here and close above, then we have shifted in delivery. Now we should be thinking of buying instead of selling. Okay. These are tricky points. The reversals are usually tricky, but I'll show you how to do it. Now check this. You see how we have dissected this market from up here going down here. This is the IPDA. This is the algorithm itself. This is how the algorithm works. This is how it delivers price. We break below the previous lower low. That's breaking market structure. We have a new dealing range in this lower high, this lower low. Retracement, expect a retracement. That retracement, we hunt for new sales within that dealing range. Get a sell, drop. Once we break below the current dealing range, we have a breaking market structure. We have a new lower low and a new dealing range. The new dealing range is between this lower high, this lower low. Again, drop, break in structure, we break this structure, we break this lower high and break lower low, the new dealing, the current dealing range. Then we have a new lower low. Retracements, create a new lower high right there, drop, breaking below the current dealing range. That's lower high, then lower low, breaking market structure. That we have a new dealing range that's between this lower high and the new lower low, just been created after breaking this previous dealing range. The current dealing range between this lower high, this lower low, retracements, get a sell, get a new lower high within this dealing range, drops, breaks below the previous lower low, or breaks the current dealing range. That's when we have a breaking market structure. The breaking market structure, we have a new dealing range, the new lower low. So our current dealing range being this lower high, this lower low. Again, we get a retracement into this dealing range, being this lower high, this lower low. Get a new lower high. That's where we sell, drop, breaking below the previous lower low, or just breaking the current dealing range. Lower high, then lower low. Once we break below that, that's breaking market structure. We want to see a candle break and close below the current dealing range or below the current lower low. we make it a confirmed breaking structure. And then we have a new dealing range in this lower high, new lower low, retracement with a new lower high, drop, break the current dealing range. That's BMS. The BMS, we have a new lower low. We expect a retracement within this dealing range. It's lower high, lower low, get that retracement. Lower high, drops, break the previous lower low, or break this current dealing range in this lower high and the lower low. Right there, we have a breaking structure. This is the lowest point, because after we broke above this lower high, we shift bullish. You can see it in bullish like that. Now, the reason we mark out these dealing ranges like that is that is for us to identify where currently are, which current dealing range are we expecting to operate in. Okay, so we must mark these dealing ranges like that to get our current dealing range and what we expect to do in the current dealing range. Okay, right. So this is the bearish market structure. This is the algorithm. This is how it works. This is how it reverse price. Of course, this is just an introduction. We shall dive deeper and deeper into this. Yeah, find your edge in this. Find the profitable edge in this. All right. Okay. Now let's look at a bullish market structure. So I said that after we break above this lower high up here, we are bullish, right? So this is the lowest low of this drop. Okay, the lowest low, this drop. But after we break above this lower high, lower high. Now we shift bullish. Now we start looking for higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. Okay. All right. So this is the lower low, lowest low. Actually, once we break above this low high, the bullish. Now the next obvious higher high, shifting bullish, is the highest high. Okay. This is the highest high. This, this is the obvious high. Okay. In a weekly perspective, this is the most obvious higher high. This bullish market structure now, we have higher high. So our dealing range, this is between these lowest low down here and the new high which has been formed after breaking above the previous lower high. This high. So our current dealing range between this lowest low, this high. This is the dealing range. Of course, we expect a retracement within this dealing range. This is that retracement. Okay, this is our dealing range, the bullish market structure. This is the current range. So, yeah, so we expect a retracement. This is that retracement. The retracement with a new higher low that's there. Okay, hello. This is on higher low. So we are now bullish, yeah. Okay, so this is on higher low. So in that dealing range, higher low is created within this dealing range, in this lowest low, this higher high. All right, so we drop, this is the pullback or the retracements, create a new higher low, rally, breaks above the previous high. This is where we have breaking market structure. We have broken above this current dealing range, the bullish dealing range, right there. We have breaking market structure, right there. With the breaking market structure, we get a retracement in this. So with the breaking market structure, we get a new high up here. Okay. This is some high. Okay. So this is the current dealing range. The current dealing range is between this high low and this high. Right there. The current dealing range right there. So we get a retracement within this dealing range, this high low and this high. We get a retracement. This retracement gives us a new high low. So new high low again. New high low. New high low again. We rally. This rally breaks the current dealing range. The current dealing range is between this high low and this high. We get a retracement, we get that high low, then rally, and immediately we break above this high. That means we have broken the current dealing range. That's high low and high. This is BMS. This is breaking market structure. Yeah, so breaking market structure. Again. We have a new dealing range that's between the high low and this high. So this is high low, high. So obviously currently on euros on weekly time frame, we are in this dealing range in this high low, this high, so has been created at the breaking structure, the current dealing range in Euro USD weekly time frame. Okay, this is a new high. So what would we expect? Yeah, we would expect for the market to rally from within this current dealing range, within this high low, this high, yeah, because this should be the retracement, and rally, like how? Rally like this to get a breaking market structure like here. But sorry, this will happen. This will not happen. Why should it? Why will it not happen? Because these charts, the IPDA operates from higher time frames to lower time frames. Okay, so if we go to monthly time frame, let's go to monthly time frame. Yeah, you can see these. These are the weekly ranges. Of course, you can't see them in monthly time frame. They are not clear if you see this, right? But in monthly, I want you to notice that we are bearish from this dealing range, in this lower high, this lower low, right? You get a retracement. Then this dealing range, this lower high, then lower low, right? Right. This is retracement, right? Then we broke below this lower low. This is monthly time frame now. So our monthly dealing range is within this lower high. This is the monthly dealing range. Let me change the color of this. This is the monthly dealing range. Okay. In monthly, we are within this lower, lower high because we are bearish. Monthly time frame. Check this one. Monthly, we are bearish. You see, we are bearish in monthly. So in monthly, this is the dealing range. This is the monthly lower high. monthly time frame. Yeah? This is the monthly lower low. Actually, this down here. This is, yeah, so in monthly, we're within this thing, within this lower high, this lower low, right? So this rally is just a retracement within this range. So the monthly dealing range, this is the monthly dealing range. Within this lower high out here, this lower low down here. This is the monthly dealing range. Okay. So this is a retracement in a monthly dealing range. So actually, this should be a lower high in monthly. Okay. Check this. This should be a lower high in monthly time frame. Lower high. Okay. Lower high. So what would I expect? I would expect this chart to drop in monthly time frame below this lower low to get a BMS. So I would expect to drop, break below this current dealing range. Hence, we have a break in market structure right here. Okay. So as much as we had this run in weekly, in monthly time frame, on higher time frame, the chart is bearish. So that's why I would expect this dealing range, this current dealing range weekly to fail. Because you see, this is the monthly dealing range in this lower high, this lower low. So I would expect this current weekly dealing range to fail. Because I would be targeting for this lower low in month. Yeah, the monthly. Let's check the monthly. Yeah, the bearish month, right? So this is lower high, lower low. Lower high, breaking market structure, somewhere right here, create a new lower low. So the algorithm, market, the IPDA, being positive, it will be respect this weekly dealing, this higher low and higher high. So the drop, break this, break this, break this, going for the monthly lower low. That's because this is the monthly dealing range. Doing this lower high, lower low. So this is just a retracement, lower high, the monthly lower high, then drop to break this dealing range, the monthly dealing range. Hence, we have a breaking market structure somewhere here. The new lower low in monthly time. So I expect this weekly dealing range to fail. So if it fails, right here, we will now have a new lower low in weekly time. Example, when we broke above this lower high in weekly, we had a new higher high. Yeah. So when we break below the higher low, we now have a new lower low. Yeah, that's it. That's good. So these are the dealing ranges. Dealing ranges are in all time frames. The monthly, the weekly, the daily, 4 hour, 1 hour, 10 minutes, 5 minutes, the lowest time frame. But for introduction, I'm going to show you, I'm going to present this weekly time frame. I hope someone has learned the introduction in market structure. Please, I would urge everyone to go back and mark this chart. Just mark it from where I have just marked it. I've just marked it on this way. The bearish, the bullish. Yeah, that's practice. Please make sure you practice. We will dive deeper into this. I'll record another practical on USD, probably on dollar index. Yeah, make sure you practice. Make sure you practice. Because usually say market structure is the key. Because if you can identify these dealing ranges correctly, I assure you, you'll never miss a move. You'll never miss any move in these charts. Just please do practice. Okay? We'll dive deeper, and with time, we understand it all. Yeah, it will become easier with time, and that's only if we practice. Yeah. Yeah, that's it for the dealing ranges. I'll record other charts. Actually, I'm working on editing other tutorials. I've recorded a lot of them. So I'm working on editing, rectifying the mistakes then. So for the dealing range and breaking mark structure uh, lecture, please make sure you practice. Okay. Yeah. Because it will become easier when you practice. So you say practice makes perfect. Okay. Yeah. Yeah. So we will dive deeper into this. Also, when we study time frames and market structure, we will shift from that time frame. The way I've shown you, this is the monthly billing range. These are the weekly billing ranges. We go to daily time frame, we get the daily time frame dealing ranges, the 4-hour dealing ranges, with that. The most minimal time frame, the lowest time frame. And you will see, you'll never miss a move. Okay, so please practice. Please practice. Thank you for the nice.